What's up, guys? Welcome to another daily recap of the S&P 500, the SPY. Just to take a look at what ended up happening today. I know today was a crazy day where in the morning you ended up seeing a huge sell-off and followed by a big rally. And so kind of the question lies now is are we good? Are we back in a bull market, or is it still kind of shaky, or should we still be careful? And the answer in reality is that it's actually kind of neutral. It really all depends on where tomorrow we open and how we end up, running. In yesterday's video, I was talking about how, uh, when we ended up closing here, there's actually a bearish candle. So for the next day, you should be set up kind of like with a bearish attitude. And we ended up actually gapping at this level, and I said that this is your ultimate line in the sand below, and it's selling off and above. You're good. It might even run in the zone. So the 384.74. I ended up, when we take a look at the daily chart, we ended up opening right at the number. On the first tick, the high day was actually 384.74. And it looks like as soon as this got this rejection right here, you end up getting that sell off all the way down in the morning until about 6:50. We'll end up catching support around the 380 level. There is some support from previous days around 380.20, 380.40, as well as the fact that since it's kind of a round even number, it usually acts as support resistance. We ended up seeing a bounce. We ended up seeing the run up all the way to this number. Once it crossed it, within a minute, you saw a big acceleration to the upside. And one way that you know that this number is actually important is because if you look at this volume, huge volume, 1.4 million in 1 minute in this candle right here. So once it broke, a lot of people who were short selling probably got out, and that's why you end up seeing this huge spike in volume. And again, it ran up to the 386.10 level, sold off. Actually, this number is about 386.19. Okay, 386.19. Sold off, chopped around, and before started rallying up to the end of the day. But the thing is that we can't really take this as bullish, because you can't take 10 steps back and go 8 steps forward and say that you really you're progressing forward, right? Because if you go ahead and look at it at a daily chart again, we actually ended up closing right at where right within the range of where we ended up closing yesterday. However, is this candle more bullish than yesterday's candle? The answer is yes, because yesterday's candle was straight up bearish. This candle is very neutral. One thing that is worrisome though is that it did try to come back into the range right here, where we saw where we've been seeing the consolidation for the past couple weeks. I'm talking about like this, this range right here. It looks like it came up to test, but it quickly got sold off. Not quickly, but it got sold off towards the end of the day. So we're still below this level, and this just says that if we would have closed above this level, we would have been good to trade, in this channel for the next couple days. But since we did it, we still don't know what direction the market's going to take. Tomorrow we could very well, see a sell off in the morning, assuming we end up giving up, the support lines. So as of now, it's neutral. It managed to recapture, the moving averages. So we're gonna have to keep a lookout on where it opens tomorrow. So tomorrow is gonna be pretty much the same plan as yesterday. If you open below this number, you're looking to sell off. You're looking to sell off either into 380, 40, 380.20, or into 382, 50, around that area. Now, if you open up above this level, it needs to break above this pink line before it makes any additional up moves. And it looks like a lot of last week we ended up seeing a lot of bluffs where it looks like we saw a sell off. It looks like we saw a sell off and it recovered, sell off, recovered, sell off, recovered. The day might come where you get a sell off in the morning and that recovery doesn't happen. And what you're going to get is you're going to get an acceleration to the downside. And so, just remember, when this market likes to move, when it moves down, it likes to take the elevator, but on the move up, it likes to take the stairs. So, you could be in for, a big red day, one of these upcoming days. I would say just start playing it safe. Until we can get above really these levels, you can't really let your guard down. So for now, that's pretty much going to be it for today. I didn't end up taking any trades. I actually have hospital or clinic on Tuesdays, so I actually don't trade on Tuesday, but I still do the recaps. Um, Make sure that you guys are putting stops on your stocks. And cash is a position. Today, if you would have had cash in the morning, that would have actually been your best position because you did see big bounces in a lot of the stocks that ended up seeing a down 15%, down 10%, down 20% in the morning. Um, and so you want to buy those on the dip, and then you might want to swing, you might want to lower your position, but just be careful. We still don't know where this market's going to go, um, and that's going to be pretty much it for today. Oh, one thing to note too is that um, un- if the market tomorrow at any point goes beyond below yesterday's low, which is about 380.11, it's selling off even more. So I'm going to go ahead and add a line here, just to show that. And this right here would be your ultimate stop loss, maybe around 50 cents below or so. Just be careful. We'll see how tomorrow looks. If we want a green day, the safest bet would be to open above this line around 387.60. Now, if we like I said, we open around here and here, you know, you're looking at a neutral day below here, and you're looking at another red day. All right, guys, take care. If you have any questions, just drop a comment or shoot me a message, and we'll be